Back to another video, guys. Before we get into today's video though, I just want to give out a warning that this is not financial advice but purely my own personal analysis. I will never tell y'all exactly what my plays are or what you should follow. I'm just here to give you guys insight on specific stocks and what to be looking for and keep an open mind about for your own personal sake. So with that being said, we can now get into the video. What it do, guys, family? Back with another Levels video. It is 8/7/2024. This is aftermarket with close. We've been seeing a lot of, resistance from our 119.91 level. As if, if you've been in the chat, if you're new, you now know that we had really heavy resistance at 119.91, as you can see here from this double top, and that is also a chart pattern, a double top. So if you usually see that, it means it's going to come down. It did. It's not a solid double top unless it breaks past the neckline, and this neckline is actually support. And if you know Xom, you know it trades halves and wholes. So our first support is 114. Okay, then our second support is going to be 111, and our third support is going to be 108.50. Those are our three supports for looking at the bigger picture for bigger bounces. And then for the resistance, we have to pass 119.91 to then go to 121.50, and then push up to our all-time high of 123.77. But for where we're trading at now, we've just had last week the bounce off of our main resistance, came down, bounced up a little bit from our 114 range, and now we're trading in the 117 to 115 area. I do all my charting for the longer run and seeing like the bigger picture of a stock on a higher time frame. Simply because there's less noise, meaning less candlesticks, so it's one, not only easier, but two, it just shows you the bigger picture of where it's looking like it's gonna go. We've been in a cup and handle, we broke out of it, and then we just haven't been able to get past that first resistance. It's still possible, as you can see from this trend line here that I'm about to draw on the bottom. We're still respecting somewhat of the uptrend, so unless we break past this 114, which is that first support, then the cup and handle pattern is completely out of the picture, and it's going to take a miracle before market crashes for this thing to push up to all-time highs. But as you know, as traders, we make money both ways. So it doesn't matter if this thing goes up or goes down, because regardless, we're gonna make money. But just for some insight on the matter, if you come down into the 15-minute for tomorrow's trading session, you can see here we are in a bullish pennant, and I'll show you what the difference between a bullish pennant and a bearish pennant is. You can see bullish pennant is an uptrend to then a little bit of bounce of some resistance and support. And then the opposite for bears, obviously you're on a downtrend, come into it for resistance, support, and then break. That's just by the textbook. Obviously your chart's not going to do the most cleanest up, down, down, break. It's going to have a little bit of, drawback. It's just not going to be textbook clean. And if you don't know that, well, you need to be studying the charts more, because it doesn't always just look like a picture online. It's going to have different types of breaks. It's going to come down further. It's just not going to look as clean as it does on a picture. So you just have to be prepared for that. But as of going into tomorrow, we are in that bullish pennant. So you can see here, right? We really need to break past 117, which is our first whole number. We need to get past that 117 to see any further upside push. And then if we break past 115, then we're going down. We have a little bit of support in the 114.50 and 115, but other than that, if we break and hold below 115, I mean, we're coming down to 114, no questions asked. And then we see if it holds its support, or if we break and then break uptrend and just come straight down, which won't be a problem. We'll be there. We'll be ready. Gas Crew knows how to play this. For anybody that's new, you're in for a journey, so just strap up and be prepared and get as much knowledge as possible. Like Tattoo Money says, learning is earning. The more learning you're doing, the more you're going to earn. So just get your textbooks out, write as much down as you can, and fill your brain with knowledge instead of crap. That is not doing you anything to benefit you in your life by not learning knowledgeable things. So that's why this has been created, this channel, to help the newer traders, and also just keep updated with the people that are actually trading the XOM. Eventually I'll go over more tickers, but as of now I just want to focus more on XOM. We got a strong foundation surrounding it, so just being more locked into one stock, it's just more beneficial for the long run. Being able to just give all your focus, discipline, and patience into one, and then once you've mastered the one, then you can branch out and do others. Personally, for me, I like to do SPY, QQQ, Microsoft, IWM, sometimes Apple, but my main four is XOM, SPY, QQQ, and Microsoft. But as of now, lately, I've really just been focusing on XOM. I just like the way it moves. It's really simple. Tattoo Money had a really good thing going on, teaching everybody how the machine works, and it's fairly simple as long as you just put in some work, and you actually have like a common sense of understanding the stock market and charting analysis and just being aware of what and how it's trading. So as of now, these are the levels to just be mindful of, for the long run at least. For the short term, like I said, that 17, really need to pass by that to see any, push up to our halves and our holes, like 1750, 18, 1850, 19, and then push back up to our resistance. And then for our downside, push down past our 15 to get to 1450, then hit our support at 14, and then see any further push down, as you can see on the chart. And then also, just so y'all can see what I'm seeing, because most people aren't that familiar with chart patterns. This is what a double top pattern looks like. This is by the textbook. You see, this is a perfect example of what the stock market would look like for a double top. And then if you come over here, you can actually see it's pretty identical. It comes down, comes up a little bit, and drops down, but then ultimately has that double top here. Same thing happens here. We came up, down, stopped up right here, but then ultimately we still hit that double top and then just breaking down. So once we get past that neckline, like I said, you see where this neckline is here, we can get past that, which is at 114, then we can see further downside. Like I've been saying, I want to see on the bear side for this. Bulls, I mean, y'all need to step it up, to be honest, if we want to see this thing go to all-time highs before September. But I'm really with the Bears, so by any day during the weeks in the month, this thing's going to drop, or it's going to skyrocket. But regardless, we're going to be here for it, making money off of it. It's not going to affect us of which way it goes. Unless you just don't know how to pivot and play, then that's on you, and I suggest learning how to, because it's better to, instead of being biased towards one direction, be able to move and pivot with both directions and make as much money as you can. So you're not limiting yourself, because there's just no reason to limit yourself in this business. And you also have to think of this as a business. Like, you want to be able to do as much as you can and be as successful as you can. So why limit yourself to only one thing when you can do two things and gain just as much from both of those things? So you kind of just have to think about it like that. But yeah, so there's two chart patterns for you. You got the bullish pennant, the 15-minute double top. You see at the resistance. You got our levels now. So you can now put that on your journals just for a heads up of the long-term levels, and then also for the short-term levels as well, just for the normal day trader scalping. Even though really levels for scalpers, you wouldn't really care too much for it because you just look for, your indicators, candlesticks, and if it's going to go up to this point, if it's getting down. But for like the day traders, swing traders, these levels are very key for you into doing what you're doing. So it's good. But yeah, I hope this video was very helpful. If it was, leave a comment down below. I'll be making more of these videos, so let me know if it was at all somewhat helpful, and I will catch y'all in the next one. Peace.